The real estate bubble has certainly deflated here in the United States, with home prices plummeting and foreclosures reaching records. A report today says that one market said to be invincible in this recession, well, has finally taken a hit. Ashrat Carmiel covers real estate for us here at Bloomberg, and she's here to tell us which one and why. Hi.
Hi.
So, which one we're talking about?
Talking about Manhattan.
And they've really kind of held up until this point, haven't they?
They've held up.
Or it has held up, yeah.
It has held up. And this is the first quarter. I mean, there have been sporadic price declines, but this is the first quarter where you see declines across every size of apartment, across co-ops, across condominiums, across neighborhoods, that first universal decline.
Right. All right, so what's causing the drop now?
Well, what's happened until now is you've had a lot of condo closings that were new developments that were built in the boom times, 05, 06. So the negotiated price in 05, 06, at the peak of the market, those were only closing in late 08 and 09. So that data was still in the brokers' reports. So that was keeping the median high. And what's happened also now is the sales in the last quarter that closed, a lot of them were under $1 million, so that really made the median go down.
Let's talk about those numbers, because as you said, what's interesting, what's happening now, it's across all types of units,
right.
Small units, large units. I think the large units are getting hit the most. I mean, so these are pretty significant numbers.
Those are high, yeah.
All right. What about, I mean, when you talk about sales, and I know when everybody around the country kind of hears about sales in New York, they think, well, those are pretty high prices. Talk to me, though, about the typical sale in the second quarter.
Typical sales was under $1 million. 61% of all sales were under $1 million. So you had a lot of first-time buyers coming into the market.
That's unusual, Ashrat?
Well, I don't know if it's unusual so much as that it is a change from previous years. Like this time last year, it was under 50% of buyers were under $1 million.
What about those luxury sales, so those really kind of high-end, expensive apartments?
A lot of those didn't happen this quarter, and the luxury market is considered the top 10% of all sales. And last year at this time, that was sales of above 3.3 million. This year it was a low 2 million. So that was the top 10% of sales.
Now, what about mortgage rates and so on and so forth? We've been talking about the impact that rising mortgage rates have been having kind of on the overall real estate market. I mean, what does mortgage financing what impact are we seeing in that in terms of Manhattan sales data?
Well, you see that in the luxury market. I mean, it's very tough to get a jumbo mortgage these days, and so that would be in New York anything over about $729,000. So any kind of property in New York that would be luxury would probably require a jumbo mortgage. If you can't get it, you're not going to buy it.
Yeah. So tough times hitting New York at this point in terms of real estate. Okay. Ashrat, thank you so much. We appreciate it.